Today seems to be a sucky day for growth AI semiconductor investors, to say the least. We can see popular companies like AMD down roughly 5.4% on the day. Now, we're going to look at a lot of other companies. And on today's episode, what I want to do is take a closer look at six companies that I'm actually kind of excited to see pull down a bit. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So first, let's just start off with what are some of the things impacting the overall market. It's just a lot of macro news. There's nothing individually happening with any of these companies that are changing the long-term thesis. And if you guys follow my channel, this is what this channel is mainly focused on: long-term investment. So in the short term, yes, you could say that a lot of these stocks has seen a nice pull up. I mean, we can see an AMD, for example, up roughly 45% in the past 6 months, up nearly 100% if you kind of pinpoint some of those lows. So you could see that there was some form of excitement in the stock, and some form of pullback is what many would say somewhat expected. Now, what I'm talking about now is I invest in companies that I'm going to hold for multiple years. Companies like AMD, companies like Nvidia that have held for numerous times and for numerous years and have been multi-bagger for my portfolio, right? AMD is a stock that I've been owning since the low single digits. Same with Nvidia. Same with some of these other plays out there. And these are the times where I decided, Jose, is this a big opportunity, a decent opportunity, or a small opportunity to add onto these shares? Because in the long term, regardless of how maybe we can see more pull downs in the short term, in the long term, do I believe these are still multi-baggers? So the first company is going to be AMD, sitting at a market cap of $270 billion. So the first question, is this, in my opinion, still something that will beat the market in the long term of things? I think yes. I think this is one that's going to be a multi-bagger in the next 5 years. The main reason is the AI market is pretty strong right now. And this company is finally going to have some form of competitive product by the 2026 era with their Helios rack, which is going to be for the AMD MI400 series. So the AI market is going to continue to grow. I don't believe they're going to eat Nvidia's share, but that doesn't matter. The market is growing so quickly, and for them to take a little bit of the crumbs in this market is going to do a lot for their growth opportunity. Now, in forms of what would I take this pull down as? Is this going to be a heavy allocation, a medium allocation, or somewhat? Let's just say the low dollar cost average, normal dollar cost average, or high dollar cost average at this opportunity. So right now, AMD is sitting at a median forward PE ratio for the past 5 years of roughly 34.2. The current forward PE ratio is 32.85. So it's not necessarily undervalued or overvalued based on his historical numbers. So for me, this is more of like a low dollar cost average. If we were to see some crazier pullbacks, it would be a little bit higher in dollar cost averaging opportunities right now. But right now for AMD, with this pullback, nothing too crazy. It would just be low dollar cost averaging until if we ever see opportunities to go a little bit heavier. Now, stock number two is going to be Nvidia. Nvidia was down roughly 3.5%. We do have earnings coming up next week, and this is going to be the best channel you're going to find any NVIDIA news, any AI news. So make sure to hit the thumbs up and the subscribe button. And if you are enjoying the charts that we're looking at right now, they're all made by Fiscal.ai. Check them out. Great platform, 15% off. If you're serious about investing, you're definitely going to need this platform. So right off, let's just start off with forward PE ratio here for NVIDIA. So for NVIDIA forward PE ratio, and this is for the next 12 months, right? The next 12 months from now is sitting at about 35.52. Very a little bit more expensive than AMD, but this is the leader in this space, right? This is the one that's growing markets. This is the one that continues to see that strong growth in data center. This is the one that has that massive free cash flow. This is the company that has that massive cash position that no one else seems to have, opposed to maybe like your Apple. So obviously paying a premium. Now, I am super excited for NVIDIA because of this. NVIDIA right now is the king in both training and inference. The reason they are the king of this is because of systems like this, the NVL72, the ability For NVIDIA to be able to connect 72 GPUs and make it seem as one unified GPU is crucial for training and inference. I know many people might have been lied upon and told that AMD is the best for inference. That is not true. NVIDIA with the NVL 72 is the king of inference, and it is a big moat for them. That's why the MI 400 with the Helios rack will be a competitive play, because this is going to be the first time AMD will able to kind of connect a lot of GPUs and make it seem like one unified GPU, which is crucial for inference and training. But right now, NVIDIA is the king. Now, when we're looking at the PE ratios, for PE ratios, we can see very similar to AMD. The median right now is 37.49. The current is about 35.52. This isn't a stock that's undervalued at the moment based on historical numbers. For me, this will still be a very low dollar cost averaging, very similar to AMD. The opportunity to add little shares here and there to kind of increase my overall exposure. Now, stock number 3 is going to be another semiconductor company. This is going to be Marvell Technology, ticker MRBL. We can see the stock is down roughly 6% on the day. That is pretty intense. First, let's kind of look at why I'm bullish about this company. For those that are not familiar, Marvell is one of those companies that help big tech players design their own AI GPUs, their own AI CPUs, their own semiconductor solutions, opposed to just buying third-party plays like AMD, like Nvidia, and so on. Recently, they had an AI event where they increased their total addressable market, where they entered new markets, where they believe their share is increasing in the overall market. They mentioned new customers won and more AI, more ASIC and custom solutions won as well. So overall, for me, this is a company with a market cap of $60 billion. This is one that I really do like. There comes with risk. There's a lot of competition, obviously being Nvidia and AMD, and also Broadcom. But I believe with this AI market, a $62 billion market cap has a lot of growth opportunity to be a multi-bagger in the long term of things. Now, with the current valuation, median forward PE is 32. The stock right now is sitting at around 24.43. I do think this is a little bit cheaper than the other players, and it is a little bit undervalued compare. So I wouldn't put this at a low dollar cost average. I would put this somewhere between a normal dollar cost average or high dollar cost average. And for everybody, you should have your own plan to kind of determine how you determine all three. But for me, Marvell is one that's somewhere between a normal and heavy dollar cost average, because I do believe there's opportunity. It does come with risk. Now, the other 3 companies I want to say do come with a lot of risk as well. So company number 3 is going to be CoreWeave. The stock is down roughly 4% on the day. In the past 5 days, the stock is down nearly 30%. In the past month, the stock is down roughly 25%. Now, I really am liking CoreWeave right now at a market cap of $45 billion. I've been selling on the way up. I've talked about how it's been a little bit overvalued. Now it's looking pretty exciting. Now, for those that are not familiar with CoreWeave, this is a company that builds AI infrastructure. They actually have a really great partnership with Nvidia. Nvidia, I want to say, is kind of like their I wouldn't say sugar daddy, but Nvidia really has it out there to make sure they succeed. Because, right, we have all these cloud players trying to find their own AI chip solution. NVIDIA is trying to say, look, I don't care if you go do it. I'm going to build my own clouding team out there. And CoreWeave is one of the ways around it. They are the first to deploy the GB300. They talked about it July 3rd. They're able to build systems pretty quickly. Now, this is a company that is having a lot of debt. But if the AI market is truly as crazy as it is, I think this company can dominate. Like I mentioned, that comes with a lot. It's a rocket ship. I've talked about it in the past. A rocket ship being that if this is going to be successful, it's going to go places. If it's not successful, if there's a small hiccup on the way it runs things, it could blow up and see massive stock price decline. Now, recently there has been the lockup period has freed up, so sellers might be selling, right? And especially since the stock is still up nearly 132% in the past year. Obviously, you're seeing that negative pressure right now. But in the long term, at a market cap of $45 billion, it's not looking like the worst thing. Now, a company that's within this similar market is Nebius. And now Nebius is a lot smaller, market cap of $16 billion. We can see the stock is down roughly 7%. Now, what I am excited about Nebius, very similar to CoreWeave, they're not NVIDIA's poster child, but they do have a nice partnership with NVIDIA. They are expanding data centers all over the world. Their connected power is, they have a lot of contracted power. So kind of look at this like your backlog, and this is how much they can kind of build throughout the year. So they have plenty and plenty of kind of backlog, you can say, that they're going to be willing to fill up. We can see the AI market continues to grow. They are expanding dramatically in kind of data center buildouts. They have a lot of great customers that they just announced, Cloudflare and Shopify, and they do have other businesses like autonomous driving with AB Ride. They also have some nice equity investments in AI companies like ClickHouses and Toloka that are benefiting throughout this AI phase. So, Nebius is another one that I am liking and I do own. I actually own more Nebius than CoreWeave right now, just because I do enjoy, but that might change in a bit, especially with CoreWeave continuing to drop. Now, again, the AI infrastructure story here is what I think is crucial. And for these to succeed, the AI story needs to really succeed as well. Now, I'm looking here at forward EV to sales ratio for both CoreWeave and Nebius. The reason I'm really enjoying CoreWeave right now is look, CoreWeave and Nebius used to be trading at similar forward EV to sales ratio, but there has been a massive shift in just the past few months. I think CoreWeave right now is looking a little bit more attractive than Nebius. So for me, Nebius would be somewhat of a low to medium dollar cost average, and CoreWeave would be somewhere between a medium to high dollar cost average based on the current valuations. Both of them could be like a normal dollar cost averaging, but if I was to pick a favorite right now, I think it would be CoreWeave. So both of them benefiting dramatically from the AI space. Now, the sixth company and the final company we have here is Gitlab, ticker GTLB, market cap of $7.3 billion. Now, you can see most of my style is growth investment. I do have a lot, I do want to say I have a lot of positions in things like ETFs, like index funds. So I get to be a little bit more aggressive in some of my growth positions as well. I also have multi-baggers with Nvidia, AMD, and the list goes on, which are very helpful for me to continue to do this. So keep that in mind when building your own portfolio. GitLab company is $7.3 billion. Few things I'm excited is recently on August 6th, we can see that GitLab signed strategic collaboration agreement with AWS to deliver secure DevSecOps to GitLab dedicated customers. And we also saw on July 17th that GitLab announces the public beta of GitLab Dual Agent platform. So GitLab is a lot of negative sentiment right now with this company, as many believe AI coding tools like Cursor and some Windsurf and all these other places are going to end up eating their lunch. I don't think that's necessarily true at all, but that's how the market perceives it, and it gives me a buying opportunity. Now, I'm looking here at forward EV to sales. We can see median is around 9.6 since about January of 2023. Right now, sitting at 6.5. I do believe this is a little bit undervalued right now. So for this one, it would be somewhere between normal to high dollar cost averaging opportunity. Earnings are expected, I believe, next month, so that can add to volatility to this market. But regardless, these are the six stocks that I'm definitely keeping a close eye on. Some small dollar cost average, some light dollar cost, some heavy dollar cost average, and some normal dollar cost average opportunities. Now, there's a lot of excitement, and I don't need to own every single stock, but I am curious from you, the viewers, what are some of the stocks you're looking at during this pullback? The other thing I want to say is I talk a lot about dollar cost average. The main reason is pullbacks can keep pulling back. This could barely just, again, we see a lot of these stocks barely pulling down from the year to date high. Could just be the early innings, and I would never ever throw all my money at once. Not until we see some massive pull downs is where I would throw all my cash. So if I was to ever buy the dip, it's always responsible buying the dip, because I do believe the dip can always get bigger and bigger and bigger. But I don't mind doing small dollar cost averaging over time to increase the positions in my stocks. So take care, have a good day, and see you all next time.